Hello everyone! Welcome to Glory Charts channel Crypto Market Daily Updates. Hope everyone's doing well today. In this video, we're gonna talk about Bitcoin ETFs impact analysis. The Bitcoin ETFs, primarily spot Bitcoin ETFs approved in the US in January 2024, have had a major transformative impact on Bitcoin since their launch, reshaping its market dynamics, accessibility, and role in the broader financial system. Key impacts. Number one, massive institutional adoption and capital inflows. Spot Bitcoin ETFs have become a primary gateway for institutional investors. For example, hedge funds, asset managers, banks like Morgan Stanley, and even platforms like Vanguard, to gain exposure without directly holding or custodying Bitcoin. This has driven significant structural demand. Cumulative net inflows have exceeded 56 billion, with holdings equivalent to over 700,000 BTC in some periods, often absorbing more new supply than mining produces. By late 2025, early 2026, ETFs and related vehicles, like corporate treasuries, held around 12% or more of total Bitcoin supply. Institutions now represent a growing share, for example, 24-25% in some reports, with products like BlackRock's IBIT becoming one of the fastest growing ETFs ever, reaching tens of billions in ohm quickly. This has shifted Bitcoin from a mostly retail, speculative asset toward a more legitimate institutional asset class, often viewed as digital gold, a store of value, inflation debasement hedge. Number two, increased market legitimacy and accessibility. ETFs provide regulated, familiar vehicles traded on stock exchanges via brokerage accounts, reducing barriers like wallet security, high fees, or direct crypto exposure risks. This has boosted mainstream adoption. More investors, including via 401ks in some cases, can allocate to Bitcoin easily. It has enhanced transparency, liquidity, and integration with traditional finance, TradFi, with Bitcoin showing tighter correlations to equities in some regimes, but also deeper liquidity overall. Regulatory approvals and ongoing clarity, like potential 2026 legislation, have further validated Bitcoin. Number three, effects on Bitcoin price and market dynamics. Positive pressure long-term inflows have often supported price rallies by tightening available supply, for example, reducing exchange balances and creating sustained demand. Post-launch, Bitcoin saw surges, for example, from 45K to peaks over 120K in 2025. Strong inflows frequently strengthened price floors. Not always immediate direct correlation. In 2026 so far, we've seen mixed flows, early year outflows, 4.5 billion in some periods amid risk-off sentiment and price corrections. But recent streaks of inflows, for example, first 5-day streak in 2026 with 767 million, and recent days adding hundreds of millions. Price hasn't always moved sharply with flows due to macro factors, profit-taking, or other events. Current context, mid-March 2026, Bitcoin trades around 73,000, recent highs near 73K with volatility. ETFs show renewed positive flows, for example, 180 million plus on some days, signaling potential institutional re-engagement despite earlier weaknesses. Broader market and ecosystem effects. Reduced volatility somehow compared to pre-ETF eras due to deeper liquidity and institutional hold behavior. Long-term allocation rather than trading. Corporate holdings, for example, via treasuries, hit records with institutions buying multiples of new mining supply. Potential for future growth. Analysts expect more inflows, new products, and Bitcoin's role evolving. For example, in portfolios for diversification, though it remains tied to macro risk sentiment. Overall, Bitcoin ETFs have been a game changer, accelerating Bitcoin's transition into mainstream finance and driving institutional adoption far beyond what was possible before. While short-term price moves can be choppy, as seen in early 2026 corrections, the structural demand from ETFs has created a more durable foundation for Bitcoin's growth as an asset. If inflows sustain or accelerate amid favorable regulation or macro shifts, it could support further upside. Thank you for watching.